Great to be here, ladies and gentlemen, and I'm really looking forward to learn from the gentlemen who are actually leading the top companies in the NBFC segment. I would also take a couple of questions from you in between, not at the last, whenever perhaps according to the conversation. So please be ready with the question, only specific questions. I would also ask my team to be ready with the mic, as and when there's a time, we'll take a couple of questions from the audience also. That's how we can make it more engaging. So as we are discussing, and this is the first and a very important topic where the theme is derived from of this event, which is emerging from the shadows. And I have Sachin, Mr. Arul Mani, Alok Agrawal, Vikrant Narang with me. And my first question to all of you is going to be very common, and then I will get into the details. So my first question is specifically is about, are NBFCs emerging from the shadow banks, or are they still tagged as shadow banks? This is my first question to everyone, and I will start with you, Vikrant.
Thank you. I hope I'm audible. I'll say this, that just the connotation of non-bank is irrelevant in the context anymore. I think NBFCs, which we are still referred to, I think have grown in a very material way. When the context of NBFC or a connotation of NBFC came maybe many decades back, NBFCs were not in the mainstream. We were still not providers of massive financings which are happening in the country now. So today, the NBFCs form a very dominant share of the overall credit financing which happens. We may be more than 22% with an exposure which could be in excess of 30 lakh crores. So the whole connotation of non-bank has withered away over a period of time, is what I would say. So that I think, and moving away from being shadow banks, which means that you are regulated in a manner which is less intense versus, say, a context of a bank. I think that arbitrage has also gone away. I think RBI has done its bit over a period of time to bring about a regulatory sort of a intervention such that the regulations are as stringent for NBFCs in many ways versus, say, a bank. If you are an NBFC with an AUM of 10,000 plus crores, your capital adequacy has to be minimum 15%, whereas in a bank, still it is 11.5%. So the norms for which we are tested are probably more stringent versus, say, a bank. So I think both these, in the context of times we live in, I think we are moving much faster in the scheme of things.
Sure, Vikrant. Sachin?
Good morning to all. Thank you for having me here today. Yeah, I kind of, been in financing for more than 25 years, of which almost 20 years plus being in NBFC. I feel, the term shadow banking is something which I don't relate to, right? And I think this term also comes in from the fact that, we mindlessly at times adapt terms which come in from the West, mostly from the US. And in the US, this thing, shadow banking term came in, possibly when, we had the credit crisis happening and some of the non-bank, mortgage companies were the ones which led it there. And then this term of, shadow banking came in. Shadow in itself, the word definition is a poor reflection. And it has a negative connotation. And in the context that we are speaking right now, definitely so. But if one goes back to look at, and I've been here for almost more than 25 years, and NBFCs, I don't think so had anything in terms of their growth, the way we have evolved over the period. We are supposed to be, or we are kind of, much resilient than many of the other sectors. And therefore, nowhere I can relate a negative connotation getting attached to the NBFC segment. I mean, historically, we have been kind of, playing a very important role in the overall credit value chain, addressing the credit requirements of segments, customers, in locations where possibly banks were not willing to. And also in the process, we've been growing consistently. We've been delivering superior returns to our shareholders. And therefore, in the overall growth of the economy also and broad basing the credit, we have played a very important role and we continue to do so. Nothing negative coming out of that, right? It's something very bright. And also, if you look at it, therefore, where is this connotation coming in from? Possibly what we have seen, and this has been kind of, shadow banking as a term has been used over the recent past quite a bit. When we have seen in the recent past, few of the NBFCs have kind of, folded up, and maybe that's something which leads to us being referred as shadow banks. But if you look at certain data points around that, to say that over the last 2 decades, of the credit which has got extended to NBFCs through banks, and then look at the overall defaults which have happened, and as a percentage of the overall lending, these defaults would possibly be among the lowest as compared to any other segment, possibly a infra or a power or a steel or cement, right? Also, if you look at the recent data points, say maybe 5 years back, over the last 5 years, NBFCs has been one segment which has possibly consumed the highest credit from the banking channels, right? That itself reflects the resilience and the strength of the segment. As Vikrant was mentioning, we have been through more of this, I would say, convergence which is happening between NBFCs and bank, challenges which have come across due to that, challenges which have come in due to environment. Over the period, we have been resilient. We have been, taking all that in stride, still growing. I don't see any other segment in the country, even possibly if banks were subject to these kind of changes, I don't see, maybe they would also not been kind of able to come out of all this resilience the way we did. Now, this is all to kind of address the point of, being in a shadow. Now, if you look at it, one aspect where possibly we have taken a lead has been adoption of the accounting standards, where, as a country, the BFSI segment was supposed to be adopting it in 2018. For whatever reasons, we were the only one we did it. And pushed to possibly do it, but then possibly as a guinea pig, we kind of, adopted the accounting standards. Not only we did adopt it, but fast forward 5 years today, we have done a very smooth transition to it. Whereas the shadow that we are of banks are yet to do it. And one more important fact is that we have not only adopted the new accounting standards, we also have to comply with the prudential norms. Possibly we are the only segment or the organizational, I would say, institution across the globe to be kind of adherent to 2 standards. One is accounting standards and one is the prudential standards. And stringent of the one of both is something that we should be kind of adopting. So I think here, it's a clear case where we are overshadowed, the original, object or the banks, which we are called as, we are shadowing them. Also, in many aspects, I think we have not got our due in terms of while we are converging and all the regulations what are applicable to the banks are almost now applicable to us. But certain, advantages that banks have, we still don't have. For example, the deduction for special deduction which is available for, bad debts provision. For banks, it is at 8.5%. We are still lagging at 5%. We have been consistently before every finance bill when when feedbacks are taken individually and as a association FIDC has been representing this for quite some time, but we are not heard out there. So in conclusion, I feel it's not about shadow. We already emerged out of the shadow. In fact, when it comes in with regard to accounting standards, we possibly have overshadowed right now.
Sure. Meaningful thoughts, Sachin. And in fact, thanks for saying in a statement that we have emerged out of shadow banks. A headline for me for sure. Thank you. Alok, let me come to you and take your perspective, opening remarks.
Yeah, sure. Thank you. Good morning to all. And as shared by my co-panelists earlier, Vikrant and Sachin, I would, share their view. And it only adds to what today NBFCs as an industry body and as a representative of the financial institution piece in India is doing. It is no longer, as the question suggests, shadow of banking institutions. Maybe on hindsight, when you think, when this whole concept was thought of having additional financial institutions, maybe the thought process at that time, 30, 40 years ago, would have been to make an institution which is, something which is as a shadow to the banks. See, considering the demographics of our country and considering the type of banks we had historically in India, most of them were public sector banks. The thought process of NBFC, which would have been formed at that time, was an approach to provide a shadow or a small alternative. But if you look at the way the industry has progressed and the industry has grown, the kind of share we have today in the retail consumer credit and in terms of the total percentage of credit being given is increasing year on year. And we have a significant share of retail consumer finance today, what we bring to the table for the population of the country. Now, if you further divide India into urban and rural, this percentage exponentially increases when we go down to the category C, D, tier 3, tier 4 locations and the customer segment. So, as it is said, we are overshadowed. I would take a step further. The industry has been able to create new market segments. Today, microfinance is a common word. But if you see in India, this whole segment was started by NBFCs and then the banks caught up. The industry which I represent, affordable housing finance, historically there was no bank even in the housing finance industry. The industry was formed by, a strong NBFC like HDFC and then catered along. Affordable housing finance was started by housing finance companies and the NBFCs who opened housing finance companies. Today, they have been able to open new segments for retail consumer credit. And now we see the banks are following suit. So in certain segments, NBFCs are leaders and banks are their shadows, as to say. In terms of, yes, borrowing, we are dependent on banks for our funding requirements, but then for the larger NBFCs, there are various external options which are available today. The country has made, options of the capital markets very viable for us, for NBFCs to go and explore and raise capital. The environment in the capital markets and the private equity fund is very robust, wherein it gives a lot of leeways and avenues for NBFCs to raise capital. So there are many ways in which we are at par and ahead from the banking sector in terms of our customer segment, which is our prime objective. As earlier it was said, on the regulatory parameters, we are at par. We have been made at par with the banks in terms of all RBI regulations. Even though the customer segment for which NBFCs were formed to cater to the unbanked public, which is considered as bottom of the pyramid customers. Now today our prudential norms, our NPA norms have also been made at par. So though we are lending to a subprime customer in my industry, at least in affordable housing finance, we are lending to a customer who does not have a organized financial documents. Even my recognition of NPA is at par with the best of public sector banks and the private sector banks. There is no differentiation. So there's no question of being in shadows. We are there fighting, operating at the same space, same regulatory requirement, same prudential requirements, in the same market with all the players together. And I think the market share today speaks significantly that NBFCs have been able to rise up the curve. In certain market segments, we are way ahead of the banks and banks are following suit. So I would say considering the geography, the type of customer demographics, there are segments in which NBFCs are way ahead, and I see a very bright future going forward for the industry. Thank you.
Thank you for being a straightforward, Alok, quite meaningful. I think now I need to change the title of my show, or maybe next time when I'm doing, we'll make a reverse of it. Are banks the shadows of NBFCs? Thanks for being very straightforward, Alok. I really liked it from where we started, right? Somebody said that we are competing heavily. Somebody saying we are emerging out of shadows. And now Alok said, oh, we are already a leader and they are our shadows. Great. Arul Mani, let me come to you and take your views now.
Morning, everyone. I think you have seen the views of the industry leaders here. So all of us, how we feel about. I think the NBFCs as shadow banking. I think it all emerged some 25, 30 years back when NBFC as an industry was pretty much unregulated. In that sense, I think if all of us remember, I think 95, 96 when we had all the NBFCs crisis that happened, that time we had, even now we have about 11,500 non-banking finance companies registered under the RBI. Out of that, except for the top 5,000 and 11,000 companies were called NBFCs, but they were actually not having any meaningful sets or significant size. But most of them were allowed to do whatever the banks were doing. You can raise money from the depositors, you can lend money to the customers. You can pretty much do whatever the banks are doing. So, and then when a crisis happened, when I think many of the companies were in some form or other, made the depositors lose their hard-earned money, then the regulator stepped in. Then the restrictions were put in accessing deposits from the public, and then the slowly the term emerged that banks are allowed to do something. The non-banks will not be accessing direct deposits from the customers, and you will only be doing some. So then they slowly the norms and all that were established. Today, over time, in the last 20-25 years, what we have seen is NBFCs don't have that same tag as what they had earlier. Today, there are a lot of large, big NBFCs, which are much bigger than many of the banks in terms of size, in terms of the scale, in terms of the market capitalization, in terms of the asset size, in terms of the customer reach. I think they are significantly large, significantly better, and I think they deliver a significantly higher customer experience than many of the banks do. So I don't think it is, there are a lot of banks today which can learn from many of the practices of large NBFCs, which have set trends in terms of the customer experience, set trends in terms of adapting technology and using it efficiently to service customers or underwrite credit or reach out in terms of customer delight experiences. So in that sense, I think it is it's unfair to compare your shadow banking, because I think today, like all my colleagues said, I think many NBFCs are setting the trends which I think the banks are trying to emulate. I think that actually the truth. So how do the NBFCs have evolved? I think they have evolved in terms of understanding where exactly the credit gap lies, where exactly their customer needs to be serviced, where exactly the potential lies. So many of the NBFCs have reached to the latent potential across the country, be it in the urban markets, be in the emerging Indian population, or in the rural segments, or in the semi-urban segments for various other products, like it could be housing, it could be affordable housing, or it could be self-construction of housing, or it could be a microfinance, it could be small, medium enterprises loan, it could be a loan for an emerging entrepreneur. So everyone has found their niche, and I think they are very efficiently, successfully, and catering to these demands. So in that sense, I think the large part of the non-banking finance companies are delivering better customer experiences than in some of the even the banks. So one part where we may probably, many of them may not be able to have access, is the access to direct capital from, direct deposits from the customers. We have to go back to the banks, and when we actually draw money from the bank, then these NBFCs collectively can throw a systemic risk to the banking system. That is when the regulator steps in and then says, you need to harmonize in terms of most of the norms, whether it is NBA, prudential norms, and all of this, which is pretty much understandable. So, but the way the business is done, I think the NBFCs collectively do, even at the cost of being misunderstood, I say collectively do a much better job than many of the banks.
Sure, Mr. Alumani, thank you so much. I think we all understood the fact that they are not just shadow banks, but moving ahead far more aggressively, and in fact, we are beating the banks in some aspects. So thanks, gentlemen, for adding that. Let me get into some specifics, and after that, I will quickly take your questions as well, if there are any. So Vikrant, let me come to you. And for NBFCs, banks are still the largest, fund holder, or access to fund is specifically from banks. And if you look at the data, I mean, this data gives you two aspects. One is the growth is also happening in FY17. Some $3.9 trillion were raised by NBFCs from banks. In FY 2023, they raised around 13.1 trillion. So the growth is happening, but again, you're dependent only on banks. So how do you, kill this dichotomy? What could be the other options for NBFCs to raise funds? Because if your credit to access to credit becomes cheaper and seamless, perhaps you will also be able to serve your customer in a far more better and seamless manner, perhaps with the cheap interest rates, right? So could you just share your thoughts here?
Sure, Mol. No, you're absolutely right. If you let me go back a little in time, last 3-4 years. If you see what has really happened, once the IL&FS crisis hit, there was a severe dislocation in the market. I remember in those days, we used to have a corporate book, and if you indeed approach the banks, banks were looking at you with a hesitant eye, whether they want to, extend credit in a more meaningful fashion. So few things then transpired thereafter. The regulations became tighter, and in a right way. RBI has done or put in foundations for NBFCs to stand on their feet in a much more stronger fashion, maybe giving pain a little bit in the short term, maybe better in the medium term, but surely great in the long term. So I think regulatory kind of framework tightened. And what did happen to folks like us? We had to cater to 3 aspects. Point number 1, we had to raise more capital. So point number 2, we had to create liquidity buffers, provisioning buffers. And point number 3, we had to cater to liquidity. In terms of point number 1, which is capital, if you really see from a sector standpoint, in excess of 70,000 crores of capital has got raised between, say, 2019 to latest number, maybe September 22. The leverage for the NBFCs, which was pretty much at, say, 5x, has shrunk by at least 100 or 120 basis points to today tracking at close to 3.8 times. So in effect, what has happened is that there has been equitization of NBFC's balance sheets, which has happened over last 3-4 years. This meant that we could then grow using the capital which got raised. That's kind of point number 1. Point number 2, as you rightly said, that the primary source for NBFC's funding is really the bank channel, right? That is the most predominant channel. Every year we go, conclude our year ends. We hope bigger limits will get opened, and each one who's growing faster possibly gets a higher allocation of those limits. And banks in their own way kind of have put a ceiling of 11-12% of their entire banking exposure which they have towards the sector. Not that they're extending and saying, hey, listen, this is a category which is expanding in a much more faster fashion. So can I put, say, a ceiling of 15% of my total exposure to banking? That creates an extra headroom. That's kind of not happened. But the credit growth has happened, the inflation has happened, the balance sheets are growing. So you are getting an allocation. But the better performing NBFCs will get a disproportionately high allocation from the banks. And some of the NBFCs which may not stand the test of time as a consequence of bad governance, as a consequence of models which are no longer sustainable, their inability to take technological advantage and be in the market. And point number 4 is able to really stand the test of regulators' requirements, which has increased the compliance costs. So there would be some which will wither away, and the better ones will separate the men from the boys, and the bigger ones will continue to grow and hopefully get a little better allocation in terms of the banking channels allocation to them from a lending standpoint. That's kind of point number 2. So point number 1 was equity, point number 2 was banking. And if you come now, the third aspect which folks like us are doing is that we are obviously accessing the NCD market. MLD used to be an instrument, but I think with the tax arbitrage which was there and which got closed in the last finance bill, MLD as an instrument for fundraising for NBFC has effectively lost its sheen. So it's really the NCDs which we are kind of using as an alternate means. But I think when there is growth, the water finds its levels, right? So what's happening now is that banks are coming back with alternates, which is in two parts. Point number one is co-lending proposition. So the co-lending has really gone up. If you see last year, the co-lending numbers broadly, the market is suggesting that it's close to about 25,000 crores of co-lending which has happened, which is not meaningless, right? It's kind of a start. It's building up, and I think this will become larger and larger as you go. And at the crux of it, really, if you see, is the partnership between banks and NBFCs. It will help both sides to grow in a very symbiotic fashion. So we are competition with banks, but we are also their allies, and I think they look at us in a very similar fashion. We are delivering growth. But it creates that symbiotic relationship when you look at co-lending as a proposition. And second is really the DA or the direct assignment market or the securitization market. The securitization market itself saw nearly a 40-50% growth if you see last year. The securitization market, if I'm not mistaken, would be in last financial year would be close to 1.75 lakh crores. So which is again a pretty large number. And why is securitization happening? Again, the heart of it stands in the fact that NBFCs are generating priority sector loans, and they qualify for the PSL need which the banks have. So again, that's again talks about the symbiosity which is needed from a banking standpoint. So if you put all these three things together, at one end, NBFCs have raised equity. They will continue to raise equity. The levels of leverage at which we were okay to operate at, say, 5-6 times has shrunk maybe to 3.5 times. Point number two is with respect to allocation from banks, which could separate between the big boys and maybe not the more relevant ones. And point number three is the new avenues. One, substituting MLDs by NCDs, and co-lending and securitization market continue to thrive in the long term. I think these would be, in my mind, the broader framework as the next stage of growth sort of comes for us.
Absolutely, Vikrant. I think thanks for touching various aspects, and the allocation part was really important. That's where the banks also keep thinking about allocating their funds to, and the cap which is there. So thanks again, Vikrant, for being really sharing these highlights. So Sachin, let me come to you and take your perspective on a very interesting subject, which is the fintech partnerships and all. We obviously have digital lending and co-lending sessions also, so we'll not touch that aspect here. But a lot of partnerships are happening between NBFCs and fintechs. And at one side, when the NBFCs are claiming that they are growing, the large number of growth is coming from different sectors. Also, large number of fintechs also partnering with NBFCs, and they are looking to take a license for the NBFCs, which simply means that the number of NBFCs are growing, number of partnerships are happening. But at the same time, the number of NBFCs cancelling the registration is also very high. So what is working for NBFCs, what is not working for NBFCs? Why some of the big companies or maybe old NBFCs are also cancelling licenses? If you could explain that, Sachin.
Yeah, so you touched upon 2 points. One is about fintechs, and second is NBFCs, and of course the point that you made on closure of certain NBFCs happening. Now let me address it in two separate boxes. One in terms of fintech, obviously it's emergence of a new lending class which is now coming, and which is they've kind of carved a niche or a space for themselves, given the fact that the way tech has evolved in this country, given the fact that the way the network speeds have kind of come into play, and also that the various credit inputs coming in or piped in through credible standardized data formats, all coming into play, is where now this niche over the last few years has come up, and it's very exciting space that fintechs are in right now. Now, you have two categories of fintechs, one with the NBFC license, which, they, house the assets in their own books, and without NBFC license. So the fintechs without an NBFC license don't have a choice but to partner with NBFCs or banks. So that kind of, it's a no-brainer in terms of, they don't have much of a choice. But if you look at fintechs which have a NBFC license and therefore, the ability to raise capital, leverage on that and build on their books, we have seen, the initial kind of the way things have happened is encouraging, but I would still say that it's at the inception stage right now. The reason being, the capabilities that they bring on the table is possibly, is kind of addressing a certain segment of the market, a niche of the market. And we can clearly see that majority of the fintech activity, therefore, is restricted to the unsecured side, small ticket loans, and the other asset classes, we have not seen much of activity happening in terms of fintechs being present out there. Now, all that what we talk about, capabilities that fintechs have, digital, efficiencies that they bring on the table, is all, restricted to customer acquisition. But when we talk about lending, the larger part is the risk management and, collecting the money and bringing it back. Now, I was part of one of this, annual rating conclaves where I sat through a fintech session as well. And, one of the large fintechs, very candidly, mentioned that this tech and, acquiring customers digitally and giving approvals in few minutes is fine, but when they don't pay, okay, what happens? There is no tech, then it is only touch. Tech cannot, why, if a customer doesn't pay, it is basically the ability and intent to pay. And that is not something which tech can guide. That can only happen when you have touch, and therefore he was very candid enough to say that there it is still touch only, there's no tech involved out there. So I believe, these factors need to evolve over a period, and that's where, we might see fintech becoming the contribution of fintech in the overall lending pie going up. They have made a good beginning, but I think, there is still more road to cover for them to kind of become much more relevant. And of course, in the recent past now, we are seeing, the regulations are also coming into play for them to kind of, comply with. So, I would say, it's an encouraging, emerging, segment of lending which is there. But yeah, the scaling up, one has to really see the way, they can manage the risk of arising out of a lending business, how they do it. It's something that, will kind of need to factor in as we move forward. Now, coming to the second point that you mentioned in terms of closure of NBFCs or certain NBFCs giving up their license, we have seen this happening, over the, if I relate in my own stint for the last 25 years, at least 3 to 4 times. We had in the late 90s where a slew of NBFCs went down, and that was kind of sounding the death knell for NBFCs. And then immediately followed by large private sector bank getting into this space, with the multinational NBFCs coming into this space. And again, and it was supposed to be end game for NBFCs. But what happened, and then of course you had the credit crisis, and you had the regulation changes coming in, you had the demon happening, you had the liquidity woes coming in, and then the pandemic and after effects, so on and so forth. But the class of NBFCs who were there with their strong business models, have been there for decades, have seen business cycles, backed by a good parentage, they never faced any problems. So we only saw names, more and more names getting added to that list. In the past, in the late 90s, 2000, you had Sundarams of the world, Tata Capital, Chola, Ashok Leyland Finance, Shriram Group. Now we have, Bajaj getting added up, Poonawalla Finance coming up, and so on and so forth. So we've only seen these strong NBFCs kind of weather through this and navigate through this, environmental stroke regulatory challenges, but still, kind of growing. And as I said, delivering sustained and, returns over the period. Of course, we have had, quite a bit of shake-up happening. We have seen some of them closing down possibly because of their, it's something that they did, it was of their own making, the processes that they followed, the approach that they followed and the practices that they followed led to what, we saw in the recent past. And obviously, what Arul was saying, 11,000 NBFC licenses, we all know, most of them are dormant, right? They don't exist or they exist on paper. So obviously that's something I think the regulator is also mindful of, and they are also kind of, pretty actively looking at, the weeding out exercise. So that's possibly a result of that. In conclusion, I would say that, in the overall lending value chain, obviously you have banks at the top in terms of scale, NBFCs somewhere in the mezzanine positioning, and you have fintechs at the bottom. And as Vikrant was also alluding to, we are not in really, of course, there's an overlap and there will be some amount of competition, but in the present scheme of things, it's more of, these, banks, NBFCs, and fintechs are rather complementing each other in the overall lending spectrum right now. And possibly, that's how I think it should kind of, be as we move forward as well.
Oh, sure, I think, and that's where the RBI has also made a separation in terms of systematically important NBFCs, deposit taking, non-deposit taking. Quite meaningful one, Sachin here. Let me take audience views. If anybody has any particular question before I move on to my, last two questions. But anybody has any specific questions to panelists, please raise your hand. And yes, please. Can you have a mic there?
I quickly introduce myself. I'm Muthu, founder of Wangi.com. So first time I don't have to explain what is Wangi, and I'm in a place where Wangi makes meaning. So just want to understand, it's a common question to all of you. How do you see the digital banking? We process humongous volume in a month actually, but still, like we are in the emergence of a digital bank. So how do you see this space? The NBFC bank, but you have seen, a plethora of fintechs, but digital banks and neobanks these are like, again, probably the 3A or 3B kind of a thing, like the fourth division of this, fourth player in this. Like, how do you see that?
I don't know. I mean, there is a direct answer to this because the RBI has not clear guidance about specifically neobanks. But Vikrant, do you want to quickly add maybe the concept on digital?
No, you're right. I think these are extensions or adjacencies of the fintechs in a certain way. So they are carving out a path. I'm still very uncertain as to where the next level and growth of the new banks takes place, because it's still not broken out. I mean, the egg is still not broken, and the shell is still kind of intact. But it does feel like that is another stream of innovation, which is kind of going to be complementary to how fintech space is shaping up. So I still feel that maybe it needs another few quarters of seasoning for once to say that it is kind of sticking in from multiple sides and then takes forward from there.
Sure. Anyone else has any question? Yes, please go ahead.
Good morning, everyone. Myself, Vignesh, co-founder of Capital Caplogs. I have a small question, sir. Sir, we have almost 9,600 registered NBFCs. Why only 250 are active as per PAF? And other thing is that RBI is restricting by putting up regular policies, like fintech policy came on April 10th, and for digital lending there is a policy which has been shooting up. Are RBI restricting people of fintech or NBFC, or they are boosting the economy by putting this policy?
I mean, most of the fintechs are, in the process of becoming NBFCs. But Alok, if you want to add that, any?
As you rightly said, the regulator constantly for the last couple of years has been very vigilant, and it has been very forthcoming in putting in line certain regulations. Now, as an industry, how we feel and how do we see it? When you don't have proper regulated environment, you have a lot of new entries coming into play. We saw this with the fintechs, how they emerged. And then we want a level playing field, an environment where the customers are catered to in a proper way, where the co-partners and the coexistence in the ecosystem does not hurt each other. So we in the industry and also the regulator have had a lot of learnings from the past, from the experience of IL&FS, from the experience of DHFL, and many other historical things in the West and within India. And also we have gone through a lot of changes, demonetization, GST, and many other economic developments. So it is but natural for the regulator to ensure everybody's common interest. And thereby the regulations is done for the benefit of all, so that eventually there is no failure and we don't take a bigger hit going forward. So I think it is in good corporate governance for the industry, for the regulator, and for the economy as a whole. So I welcome it, and I think this is what needs to be done.
I'll just add to that. I mean, if you really see, this was also the influx of the Chinese apps, and RBI is out there to protect the end consumer from being impacted in any meaningful way. So they can't have this loose credit hanging out somewhere which is unregulated because this was not getting reported or there was a front which was being used. So I think all these regulations eventually lead to a tighter framework, but I think it's necessary in the context and scheme of things we operate in.
No, sure. But I think most of the NBFCs, most of the companies have taken license of NBFCs because they could take it, right? If you look at the list, perhaps there are hundreds of companies which are not even lending aggressively. If you have the builders, we had done some research about it. If you have the builders, who also applied for a license of NBFCs. Yeah, quick, one more question. The red shirt there, yes, please. Okay, please go ahead.
My name is Gaurav, and I represent a company, Digimani Finance. I'm the co-founder and director. We are an NBFC and a Fintech combo. So regarding this, just wanted to add one point on the on this 11,000 or 9,000, and few of them being, or most of them being inactive. There has been a recent RBI taking some steps whereby they have started visiting the registered office of the NBFCs. In fact, we have had visitors coming from a recognized very well accounting practice, whereby they've come and visited our office to verify the existence of the office, and we understood from that practice, because it was something very surprising with no notice from RBI. So when we realized that, and there was a letter which they carried from RBI that they have been kind of recognized to go and verify some of these.
Yeah, please go ahead. The time is running. So
yeah, sure. So verify these NBFCs. So I believe that there is going to be a lot of the report which I'm sure this accounting practice is going to submit is going to throw up the NBFCs which are not even in existence in physical form, and that is going to certainly kind of stop from having these shell companies which are being utilized for various other reasons. So maybe.
Okay, sure. Question, yes. Please be quick as if you can.
Mr. Sudhakar, see, the basic question is, like, you guys take credit from bank, almost 80-90% of your credit comes from bank. So obviously become a shadow banking aspect, because all the credit that you guys take from bank goes into the books of bank, because, right? So that is one. So why is that you're always dependent on banks? Is there no other medium in terms of taking credit from the public or from international sources? Now, if you look at the international global scenario, banks also do raise money from the global economy. Why is that NBFCs are not looking at the international or the other world currencies to look at? And why is that you're always dependent on bank in terms of taking credit, and you become a part of bank? You all remember there is a concept called, what do you call it? Business correspondence. You all resemble business correspondents with credit given to you by the bank. So any specific take on this?
I think Vikrant spoke about NCDs, but Arul Mani, do you want to answer?
See, basically the NBFCs can actually borrow as long as the regulator allows. I don't think there is any reluctance to access to debt either from domestic market or international markets. But I think considering the risks that are there involved, the regulator is actually, as someone is saying, that we are in the process of cleaning up and many of the dormant. So the regulator, as we speak today, I think is looking at ensuring on one side the retail borrowings we can't access, so we have kept it away from the NBFCs, most of the NBFCs. And when you access debt, then there are regulations in terms of ECB borrowings and foreign debt. So there are various challenges which NBFCs face, which they have to overcome only through growing big and ensuring their capital base is adequate to actually help them borrow from international markets. So it all depends on the size and scale. Today, large NBFCs which are AAA rated, they have no problem about accessing of debt. They don't have to. So only 30 to 35% of their borrowings come from banks, and more than 60-65% they non-bank borrowings. So it is the smaller banks, medium size, smaller NBFCs and medium size NBFCs, which largely depend on banks as a source. So it is not a bad thing to, so the banks do business through us. So actually, I think it is we are an enabler, so where you can't reach. So I would even go about and say instead of only debt, I think banks should really look at offering equity to NBFCs and promote NBFCs so that they can reach the last mile credit delivery.
Sure. So the time is up, but I will just take 2 more minutes.
One
Vikrant and
question,
Sachin already answered my second round
I
of
have one
questions.
question, if I can.
Can I take it please later? So just one quick question to Alok and Arul Mani. So Alok, when you speak about the affordable housing, by the way, I can't afford a house in Mumbai, but still it's affordable housing. So I understand it's growing significantly. So how do you see the housing finance companies going ahead specifically next 2 to 3 years? How strongly they will grow? Quickly, Alok.
Yeah, thanks. That's a very relevant question. And from our industry, see, housing finance and the entire mortgage industry has been able to stand tall even through multitudes of crises we have seen. I mean, right through Demon and even the COVID crisis in 2020-21, where we saw the moratorium come up, the repayments take a dip, the delinquencies going up, as compared to the entire segment of customer, be it unsecured, be it commercial vehicles, be it the MSME segment, housing loan as a segment stood tall and there were no major hiccups. Considering now we are moving to the new financial year of 23-24, last 2 quarters has been very robust for us. We see a strong demand from the end consumer coming back. Maybe the 2 years of COVID has helped improve the mindset of people to own a home. Even at affordable housing, people spend more time at home. We always have currently also the hybrid working model, which is continuing post-COVID. So bottom line, demand is very good. There are a lot of builders and developers who have come into the segment of catering to affordable housing. Earlier, we didn't have the supplier, like in terms of a builder body, specifically catering to mass housing, affordable housing, but we see a keen interest from developers also. So there's enough supply. There's enough and more customer demand, and people who are actually end users are buying them, and we going forward see a robust continuance of such growth and resilience in the market. For us, it is looking very bright ahead.
Sure. And my last final question to you, Arul Mane, is this. How do you see the regulations will shape up? RBI came with scale-based regulations in 2021, which NBFC is supposed to follow from 2022, which was last year. How do you see the regulators will be awakened going ahead and maybe look at NBFCs very aggressively?
No, I think regulators already given out these indications that they are in pretty much harmonizing all the norms with the bank. So because what we do is pretty much what the bank do, and I don't think they will leave NBFCs. So in terms of capital, in terms of the the liquidity coverage ratio, in terms of prudential norms, in terms of various others, I think the way the regulator is indicating and the way regulator is actually informing us is that it will broadly be aligned with the banks, and I think most of the NBFCs are very much prepared for it. I think anyway, the way we conduct our business, the way we lend, the way we look at our NPA, the way we look at our credit quality, the way we actually keep a reserve in terms of liquidity, all that is so much in connection with the way banks do. So I don't think there is going to be any challenge in terms of for banks when they tighten the regulation. But I think tighten the regulations is the way to come. I think that's the way it's going to be.
Sure. Thank you so much, Arul Mani. Thank you, Alok. Thank you, Sachin, and thank you, Vikrant, for sharing, highlighting one of the interesting trends in the industry and giving us a picture of how the NBFCs will look like. Most importantly, telling us that we are not shadow banks. In fact, we will overshadow banks. So thank you so much for adding those points, and thank you, ladies and gentlemen, for listening to us very patiently. Stay tuned. We have a couple of sessions lined up for you, and I'm sure you will enjoy them more. So thank you so much once again.